During the pandemic, China surpassed the United States and received the most foreign investments. In recent months, as China cracks down on private companies and wipes out $3 trillion from their market values, many of the biggest names on Wall Street are still advising clients to keep investing in China. And last week, a real black swan suddenly appeared in the heart of Beijing. As Chinese are speculating about signs of a possible black swan event, it's time to look at the hidden risks of investing in China. Hello, welcome to my show. I'm Lei. I'm not against investing in China. I am against investing blindly in China. But that seems to be the behavior of some institutional investors who ignore glaring risks associated with Chinese investments. I hope to provide them and you with information to cover the blind spots. Please subscribe to my channel as I will make more videos on this topic. Recently, a leftist Chinese writer by the name of Li Guangman published a blog declaring that China is undergoing a financial, cultural, and political revolution, which will end the days when capitalists become rich overnight and when Western cultures are worshipped. His article was immediately picked up by major state media outlets and was promoted heavily. Shortly after, however, the chief editor of the state-controlled Global Times raised stern criticism against Li's article. He accused Li of being seriously misleading and running against the direction of the country. He called Li's article sheer fantasy. So people started to wonder which view was the official view and why there are two conflicting messages. But actually, sending conflicting messages is the Chinese Communist Party's order of business. Communists constantly change positions. An enemy can be a friend, and loved ones may become enemies overnight. Different factions within the regime may also send out different voices to counteract each other or to cause confusion. The third reason is that communist regimes by nature are secretive and hide their agendas. What you see is not what you get, and what you hear isn't what it means. If you take what the regime says at face value, you will pay a price sooner or later. While Beijing is launching a revolution to crack down on its education, training, gaming, and entertainment industries, and reprimanding celebrities, some of whom are foreign citizens, the head of the Chinese Security and Exchange Commission publicly stated that China will continue opening up the capital market to the outside world, something that Wall Street had been waiting to hear. Then 2 days later, on August the 22nd, state-controlled CITIC Securities described the recent revolution as a disorder of investor behavior caused by the divergence of policies and economic outlook, and claimed that the release of market risks is coming to an end. And on August the 23rd, the State Council issued a policy document that promised to carry out cross-border accounting audit supervision and cooperation to increase international credibility. So Beijing used one hand to crack down on capitalists by wreaking havoc on domestic industries, and the other hand to wave an olive branch to entice international investors. Wall Street only saw the olive branch. On the day after the cross-border audit supervision was announced, the Nasdaq Golden Dragon China Index soared by more than 8% after having fallen 46% in 6 months. These moves by the Chinese regime were purely PR work for the purpose of easing investors' fear. So will Beijing stick to its words? I highly doubt it. History proves that the CCP's track record of keeping promises is very poor. Beijing is interested in the money Wall Street brings, but not interested in following its rules and standards. Not because it doesn't want to, but because at this point it cannot afford to. It would expose too much of its dirty laundry. One of the reasons foreign investors are attracted to China's bond market is the high yield. For example, when the U.S. 10-year Treasury yield was 1.63%, Its Chinese counterpart was 3.15%. But China has a serious debt problem. For the United States, the European Union, and Japan, government debts make up the bulk of the increase, while private debts remained flat. However, in China, corporate debts and individual debts increased significantly in the past 10 years and reached over 200% of the GDP. Someone summarized the difference. In the U.S., EU, and Japan, the government is getting poor by borrowing more money, but the wealth of its citizens and businesses remains unchanged. In China, the government stays wealthy, but citizens and businesses are borrowing more and more and getting poor. Evergrande, China's largest real estate developer, is being called a debt monster for not being able to repay its massive debts. If it goes bankrupt, its $300 billion debt will hit 150 banks in China and more than 1 million people will be unemployed. It will be the Chinese version of the Lehman Brothers meltdown and will trigger a financial crisis. So far, the central government hasn't shown any interest in bailing it out, probably because many other major real estate companies in China also have huge debts. Overseas funds that continue to flow into the Chinese bond market have helped the regime at the cost of the investors. Despite the fact that overall investment activities in the emerging markets slowed down sharply in July, Chinese assets bucked the trend and received almost $1 trillion in the bond market in July. The latest price of China Evergrande U.S. dollar bond, with a coupon rate of 8.25%, is only worth 30 cents per U.S. dollar. The price of another Evergrande U.S. dollar bond with a 12% coupon rate fell to 21 cents per U.S. dollar. So, does an 80% loss in bond value justify a 12% high yield? Goldman Sachs, however, advocated increasing China bond exposure in July and gave 4 reasons. 1. Chinese domestic economy is gaining steam. 2. Chinese bonds have offered high yields but low volatility. 3. Capital inflows are likely to increase with major index inclusion. 4. China is making progress on environmental, social, and governance issues. I remember a few years ago that a family member wasn't sure if he should invest his money in China or overseas. He was very tempted by the high-yield portfolios China offers. He asked a Chinese friend who does cross-border investments, and this friend told him this. He said, "Think about it. If we could raise funds for loans in China, will we still offer 8 to 10% interest?" So why can't they raise funds in China? Didn't China produce a lot of billionaires? Well, Chinese know that the wealthy Chinese don't keep their money in China. If China's overall investment environment is as promising as Goldman Sachs stated, why did so many wealthy Chinese, including high-ranking government officials and their families, have their assets sent overseas? Why are they buying up real estate, wineries, schools, and private enterprises around the world? Shouldn't they keep their money in China and enjoy the high return themselves? And why did Xi Jinping have to do everything he could to stop the capital flight? If even Chinese officials and people don't have confidence in their own country and their own economy, what makes Goldman Sachs so confident in China and Wall Street investors so sure they would do well in China? On January the 28th, at a Politburo meeting, Xi Jinping cautioned the communist leaders against black swan events. Last week, he announced that a new stock exchange serving small to mid-sized companies will be established. It's the Beijing Stock Exchange. A few days after that, a real black swan appeared in Tiananmen Square, causing a viral discussion in China about whether it's an ominous sign of a pending black swan event. This black swan appeared from nowhere and confidently strolled through the heavily guarded square, right along the center line facing the flagpole. Remember that during the DD IPO, its stock price closed at $14.14 on the first day of trading? 1414 means going to die, period, in Chinese. And neither Didi nor its stock has ever recovered from hitting the going to die price. Isn't the black swan telling us something? A day before the black swan incident, CCP founders' historic dwellings at Yan'an, the CCP revolutionary holy site, collapsed in the rain. Chinese netizens are discussing if that's a bad omen for the end of the regime. Don't underestimate these events, my friend. I think it's going to be an eventful year. Please subscribe and I'll keep you updated. Click here to watch my last video about why Xi Jinping doesn't trust capitalists, and click here to watch the video about the relations between CCP's centennial anniversary and its end. See you next time.